everyone, welcome to the Stock Market Morning Prep video for Friday, July 18th. Markets red across the board. Dow Jones down 161 points, Nasdaq down 62.5, S&P down 23.5, and the Russell down almost 18 points. The Russell just continues to get clobbered here the last several days, and that's an index that you really want to keep an eye on. Aside from the other two, which would be bonds and of course the Japanese yen, the spot yen, or the dollar yen, depending on what you're looking at. The three that I just mentioned is really going to be key in direction. Okay, that's something that you really need to keep an eye on. And so far, it's been holding true. I've been saying that we're going to have. Looks like markets are going to get weak at one point. Now, yesterday's one real day that we were down pretty much a little over 1% across the board. Does that make a trend? No, of course not. One day does not make a trend. Most of the indexes are still above their 20 moving average, except the ES, which is the E-mini electronic futures. However, we need to keep an eye on what's happening here. Things are starting to break down internally. I've showed you the advanced decliners, the internals of the market. Has the market has risen, and the breadth of the market have really started taking a turn lower. So we really need to keep an eye on that. Yesterday was just a chop fest. We come in, we had a plane crash early in the Ukraine, shot down I think a cargo plane, and then some of the Russian rebels, pro-Russia, shot down an airliner, the Malaysia airliner civilian plane, and that just sent the markets lower here at the end of the day. So you come in, you're looking at the market, oh, we're going higher, makes new highs, sells off bases, comes up, makes new highs again, and then just collapse at the end of the day. So clearly, you could just see here, very, very choppy day. So to get a good idea. Now remember, don't forget, we were down about 11 handles in the morning, took all of that back to actually go positive. So you have to say, buys and dips are coming in, we're going to buy the dip, and sure enough, that didn't happen. That clearly reversed, and then we made a lower high here, and then you were thinking maybe we look to get a little bit of a bounce, which we did ever so slightly, and then we just kind of dumped with that other news. Now we do have tensions that are really starting to escalate here. We have the Israeli conflict, now we have the Iraq conflict, and now you have the Ukraine and Russia, and you have them heating up, and it's going to be an excuse for investors to obviously take profits, and it's rightfully so. The one thing that I mentioned yesterday, before yesterday morning and last week, is crude oil. You have to watch that. I would be a buyer on any hard fall into support. Anywhere around par 100 is something that I'm really interested in looking to accumulate crude oil. That's a really, really nice trade, and you can trade that via USO, which is the ETF for crude. Keep an eye on it. Obviously, if the tensions start to diminish, then obviously the crude oil war premium will fade as well. So you just got to keep that in mind and understand how to trade crude oil. So let's go into a couple things here. What I do want to show you is that the bullish percent SPX has gone on a sell signal. Now, it's one day, and today is Options X monthly. So I think that are we going to get some follow-through from today? I don't know. I would say probably not. When you get a big down day, it usually tries to retrace back, 38, 50% of it. So I would say no, going into this weekend. Or maybe the markets do reverse. So it's an iffy bag from what happened yesterday. And obviously, if some news comes out during the course of the trading day, sure. Then all bets are off. But with Options X, it could go any way right now, and usually it's bullish on a Friday in the summer. But keep an eye on it. Next week, I think, tells a different story. I think next week, when you have the bullish percent, which is based on a point and figure chart here, on a sell signal. Let's see if this separates here. We had a little bit of chop, and as you can see, it is a pretty good indicator. I put the vertical lines down here just to show you. There is a little bit of chop, but once it does go, it does go. So let's see if this is going to hold true here. Let's take a look at the advanced decliners one more time. As you can see, we're really deteriorating in our internals. This is not a good sign. Okay, SPX ATR starting to creep up. Volatility's coming in. I think the VIX was up like 38%. So that's something also to be aware of. And then again, I wanted you to show you the German DAX, which is the biggest index in Europe. It's already rolling over. And when you have that, Germany starting to roll over, and you have some of the other bigger indexes, bigger countries starting to roll over, you have to be careful. I mean, and this here is just a bare flag back testing this uptrend line, which is now making lower lows and lower highs. So you have to be very, very careful with what's going on here, okay? Let's take a look at the indexes. All right, the three that we talked about, the spot yen, right, inversely correlated. I did some fib numbers here, and this is going to be the one target right up in this area, which is going to be right in the 1272 extension. Okay, once we break out of that area, and again, we do have that 200 just kind of sitting right underneath it. If this really starts to go, you're going to have to. This is going to confirm if we are headed in the downtrend, or at least some sort of a correction, when we get the spot yen breaking out and bonds breaking out, and of course other major key indexes starting to roll over. And that's what I'm really watching for. Again, one day does not make a downtrend. Pretty much the indexes are still well intact, and let's go through that. And here's bonds. Now, we broke through the 1272 extension. We challenged the highs, and we were up, and now we're basically outside the 1272. And I've been saying this for several weeks now, if not months, that bonds are in the short squeeze, and they're going to continue to get squeezed into the 1618 extension of 140.26. That's going to be my next target. Might not get there in a couple of days, might be several weeks, but I think that's going to be the next target here, unless something really drastically changes. Okay. ES, take a look at the ES. We broke the 20. We're hanging on to the 50, and now we're back. Remember, guys, that we took out two extensions. This is healthy. If anything, if you're a bull, which I go either way. It doesn't really matter. Just what the charts tell me. If you're a bull, you want to see a healthy correction so you can add to your longer-term positions, And this is definitely a distribution day. You can see the heavier volume. We took out the 20. We're in the 50 now. We're basically just trading flat. We were down about 4 handles early. We recouped the losses, and now we're up about 25 cents in the electronic session. So next step is going to be this middle trend line or the 200. Logical would be the 200. If we take out the 1930, then I think all bets are off, and I think we're headed to at least the next trend line support would be 1900, and then we would reevaluate. Okay, take a look at the IWM, and this is the main reason why I said several days ago, be very, very careful. Yes, the IWM was trading low, the Russell 2000, while the other indexes were trading higher, and it did catch up. I think this time's a little different, though. There is a little bit of feel to it. You don't trade off a feel, but it just looks that things look a little different here. IWM already at the 200-day moving average. If it breaks this, you're going to test this pivotal low right here at 107.34, and that's not good because it is one of the leaders in the indexes that we follow. Transports, another key leader. It is the leader actually, and then the other two behind it, but it is still above the 20. Again, still healthy above the 20. This is a decent pullback. I think you test this low here. I got it marked here, 142.90. Once we get below that, then we'll reevaluate and see what happens. But if this starts to break down too as well, it's going to help the selling pressure in equities. And we got the diamond, same thing, above the 20, looking okay. And then lastly is the Qs. Now, a lot of the high beta names really got whacked yesterday. Actually, across the board. When you have real selling, everything gets liquidated. Everything. Good, bad, it doesn't matter. Everything gets liquidated. However, but what you want to do is look for stocks that really didn't sell off yesterday. And if there was no news on the stock, that means that it's being accumulated. Okay, and one in particular that I do like, I like the ag stocks, the AGU, the Monsantos, Mosaic, MOS, POT, Potash, the fertilizer stocks. They're coming into some seasonal strength. Keep an eye on them. Also, the grains are starting to base a little bit, so that's going to help the fertilizer stocks. So that's something that I'm keeping an eye on. I am still watching the banks. They're not ready yet. I'm looking at builders. They're not ready yet. Lumber continues to fall. Again, if you're day trading, different story, but if you're looking to put on a little bit of a position for 3 to 4 weeks, 5 weeks, they're not ready yet as well. So we're looking for stocks. Today is going to be an iffy day. Let's see what happens on the opening. Wait for the first 15-minute rule. That's the best way to gauge which way the direction the market's going to go. Aside from yesterday being a chop fest, let's see if we get some follow through to the downside. It may not happen today because of Options X, but next week will surely be an interesting week for the markets. Have a great weekend, all, and I'll talk to you on Monday.